Hello and welcome to this stock analysis video. Today we're going to be doing a stock analysis on Pepsico. Now, if you like this video, please don't forget to like and subscribe. And of course, remember this isn't financial advice, this is purely entertainment and education. Now, I like PepsiCo quite a lot because of how many brands Pepsi owns. Now, if you don't know how many brands PepsiCo owns, just look at this picture. Now, that is an insane amount of companies that they own. Now, I also like it at the moment more than usually because it has just fallen so much and I'm a value investor. And just look at this, it has fallen 30, I can't speak, $32 from this top, and then we go even further back, and as you can see, it was all the way up in almost 200. So yeah, quite interesting. Now, I don't own any Pepsi stock anymore. I did used to, but I sold out to invest in some other stuff. Now, but I still like the stock quite a lot, also because they pay out great dividends. As you can see down here, just look at all these blue D's, that is dividends. And of course, also look at these green E's, which is, of course, as you know, positive earnings when they earn more than anticipated. So yeah, at the moment it is quite nice. Also, there is of course this one little hitch, which is they just made a death cross recently here on the 11th of March, and it did fall down, but then it has rebounded ever since, and now it is laying right on that point where it did make the death cross, of course. Now, as you can see, this 50-day moving average, the green one, is trending more upwards now instead of downwards, which is a great signal that a golden cross might be coming sooner rather than later. Which, of course, this is quite speculative when there still is this much between them, but it could happen, of course. And I also like it a lot because in the moment that there all of these tariff talks, I don't think it's going to hit food that much. And also PepsiCo, let's say, for example, in Denmark, if Pepsi want to sell the products in Denmark, they simply say, all right, Carlsberg, you can brew Pepsi products. So they actually just they license their products, so they don't actually pay any tariffs on that front, which they do with quite a lot of their other brands as well. Which is why I think this is going to be quite undervalued once these tariffs hit, and other companies and other branches and other niches are going to get hit worse, and people are going to realize, hey, let's get into the food sector. And that's the reason I like it. There might be some hiccups because some countries in Europe, Denmark for example again, that are boycotting some American products, but I don't think it's gonna have any impact at all on the long run. Now, if you take a look at the earnings here, as you can see, they surprised positive quite a lot. Now, it isn't those 100% up or 500% up, but this also means it isn't below. So they know quite well how much they should guide, which I like quite a lot because many companies guide a bit too low and then surprise positively, which I don't think is a great. I just think it's quite lousy. Now, if you look at the dividend, you can see here it's 3.7%. As you can see, they paid out in March, they paid out in December, and in September. So they pay out 4 times a year, which is quite nice. I prefer 4 times a year than once a year because this means you can faster reinvest your dividends. Now, if you look at here, you can look at the quarters. As you can see, they perform quite nicely, and then annually, you can see they rake in a ton of cash, making billions and billions. Now, their margins they swing quite a lot. That depends on the price of certain food stuff. Let's say sugar increase crazy in price, that is gonna mean that PepsiCo's margins are gonna be lower, and so on and so forth. So the fluctuations here is purely based on food goods and how much their price increase or decrease. Now the seasonals on this stock, let's just go back about 10 years. As you can see here, it doesn't do crazy, but it doesn't perform badly. The worst year we have here is 2024, which is down 12%. If it's down 12% from the year, it's not that bad at all. So yeah, I think it's quite decent to just have on the back burner in your portfolio to pay you nice dividends and maybe increase or decrease. All considering when you bought it, you might sell out, you might keep it, whatever. Once it falls, you might buy up even more. So I like it quite a lot to just have on the back burner. As you can see, it's not gonna do crazy, but it's not gonna fall through the roof and make your portfolio worth a lot less. Now the technicals on this stock for the day is a sell. For the month, it is still a sell, sadly. But as you can see, we did have a death cross, and there are still quite far between these two lines, the yellow and the green one, which is the moving averages. And also, as you can see, we did have a bad day. Of course, it was only minus 2.4, no, 2.7% in the end, but you do see this large red candle in the middle, so still the technicals aren't that great on it. Now, the analyst rating on it is neutral, actually, which we rarely see, with 6 strong buy, 3 buy, 16 hold, and 1 strong sell. And I think that's because this is just a simple stock, which just is great to have, but it's not gonna be a high flyer or a low burn. I know that I like example on Pepsico quite a lot, which is where Warren Buffett quote, which is if you love the product, if you like the product, you're gonna love the stock. And most people like some Pepsi products. And as you can see, they just guide quite decently, and it is increasing. So yeah, I like it a lot just because how diversified their portfolio is in the companies that they run. So I just think it's a great stock overall. Now, if you did like this video, please don't forget to like and subscribe.